Hello friends, and welcome to my fourth part of the series Compliance. Today we will discuss about the prevention of imposition of penalty by regulators. The greatest challenge faced today in compliance management is to prevent the bank from facing the risk of imposition of fines and penalties for contravention of non-compliance with directions issued by RBI. RBI issues penalty in exercise of power vested in it under the provisions of the Banking Regulation Act 1949, taking into account the failure of the bank to adhere to the aforesaid directions issued by RBI. Rationale underlying the imposition of penalty. The common concern of national and international regulatory and supervisory authorities is to prevent deficiency in the financial system that may threaten the safety of the assets entrusted to the banks or harm the stability of the banking sector and the economy. Several studies have analyzed the impact of bank regulation and supervision on the systemic risk. In line with these results, the Basel Committee on Banking Supervision recommended in the core principles for effective banking supervision. Supervisors should have enough corrective and sanctioning powers to be able to address unsound bank activities that can cause systemic fragility. Bank for International Settlement 2012. One tool is to impose financial penalties on the banks which infringe the rules or abuse the financial market. Positive impact of penalties. First, financial penalties demonstrate that supervisory authority will not tolerate misconduct and that banking principles of fairness, honesty and integrity have to be honored strictly. Second, financial penalties may restore the investors' and customers' confidence in the banking system, thus contributing to its stability. Third, financial penalties may have a deterrent and disciplinary effect. They may prevent repeated future offenses by banks by indicating the significance and direct consequences of breaking the rules. Fourth, the financial penalties may discourage banks to enter specific business that are associated with excessive risk taking and thus are related with a higher systemic risk contribution and exposure. Powers of RBI to impose fine. Regulatory authorities in India have been vested with wide-ranging power to impose fines and penalties from contravention of its direction. RBI has been empowered by law to impose penalty for the following offences and under Section 26 of Payment and Settlement Systems Act 2007 offences, which are punishable with imprisonment or fine or both. Contravention of any provisions of the Act or its any regulations, order or directions made or given thereunder, non-compliance of RBI direction or failure to pay the penalty imposed by RBI, and failure to produce any statement, information, returns or documents, willful submission of a false statement or of information or willful omission of material statement in any application for authorization, failure to comply with laid down terms and conditions, principles or imposing monetary penalty, quantum and compounding a contravention. Following factors will be considered for determining the amount of monetary penalty to be imposed on any entity. Amount of gain or unfair advantage, wherever quantifiable, accruing to the contravener as a result of the contravention. Amount of loss caused to any other authority, agency, exchequer and or to any other market participant. Monetary benefit accruing to the contravener from delayed non-compliance. Severity of the contravention in terms of degree of breach of norms limits, isolated, localized, extensive, widespread. Period and frequency of a similar contravention during the last 5 years. Seriousness of the contravention, percentage of amount involved in the contravention vis-a-vis total value of the transactions handled by the contravener during the period under consideration. Amount involved in contravention and submission of wrong, false, incomplete compliance. Prior to imposition of penalty, RBI follows certain laid down procedures such as: number 1, call for information. On receipt of information on a contravention, RBI may call for additional information from the contravener. Number 2, issue of explanation letter. On identification of a contravention, a letter calling for explanation will be issued to the contravener. Number 3, issue of show cause notice, SCN. If the RBI is not satisfied with the reasons explanations furnished by the contravenor, SCN may be issued. Number 4, personal hearing. The contravenor shall be provided with a reasonable opportunity of being heard if requested by the contravenor in reply to the SCN. And number 5, issue of speaking order. The designated authority shall pass a speaking order based on the information and supporting document presented by the contravenor and also the submission in this connection by them during the personal hearing.